Welcome, welcome, welcome. I'm your host, Henri Arslanian, and welcome to the special episode of your Future of Money podcast. Today is a very special episode where I'm joined by Peter Greaves and Brian Sims, who are the joint liquidators of FTX Digital Markets Limited. I know over the last couple of months, I got, dozens of messages from many of you who've asked me to provide color on the FTX insolvency. What does it mean? And provide some clarity, as I think one of you was half jokingly telling me how you guys became insolvency experts in the crypto space in the last couple of months. So we want to do this really episode to cover the topic. I have to say this is a really exclusive episode today where for the first time the joint liquidators of FTX Digital Markets Limited are coming on a podcast. So Mr. Peter Greaves, Brian Sims, great. Welcome on the Future of Money podcast.
Thanks, Henri. Morning.
One interesting fun fact, by the way, I think many of you may know you as the joint liquidators, but I just learned that Peter is actually a die-hard, lifelong Liverpool fan who travels to go see the team, and Brian is a rugby player, apparently. He was and it still is. So here we go. Always interesting facts about our liquidators. Guys, let's jump right in. Maybe, Brian, I'll kick it off with you. Actually, sorry, before I do that, I just want to give obviously a disclaimer. As many of you know, some of the current or past sponsors of the show may be creditors of FTX and companies that I've been involved in, also may be. And in this case, I have to say, I'm also personally a creditor in the FTX process. And actually, I went through the Bahamas insolvency claim last week. So I actually had the chance to experience it firsthand and helps me prepare for this episode as well. But let's jump in, guys, on the episode. Brian, can you maybe share with our audience, where are we right now? Post the November 2022 insolvency, where are we? Can you give to our audience a summary and what to expect now?
Sure, Henri. As you know, this liquidation started around in the Bahamas on the 10th of November, where I came in as the original provisional liquidator, and then I was joined by Peter and Kevin Cambridge on the 14th. And it's gone through many phases. As you know, with the beginning, it was a phase of trying to uncover information. We didn't have a lot of information because the debtors locked us out of the computer systems and the data, and we were getting our information from Sam. Then we had our phase of really having combat with the debtors in terms of jurisdictional battle. In the end, we all resolved matters in the global settlement agreement, which Pete's going to probably address, and the GSA, which has really put us in a good place in terms of both estates and maximizing recoveries for the customers. And where we are now is we're in the process of claims in the U.S. Obviously their bar date has passed, and in the Bahamas, our date is August 16th. So if people are going to put a claim in the Bahamas, they need to do so by August 16th. And there's a couple ways to do that. You can do it through the election process under the U.S. debtors plan, which they'll send you the election ballot, and if you click the Bahamas, you'll be led to the various links to sign up your claim in the Bahamas, or alternatively, you can put a proof directly in on our website, which it's actually a PwC address. So Peter will give you the address because I don't have it on the top of my mind, I'm afraid. But so that's where we are, and we get claims in by August 16th, and then we'll seek to process the claims from there forward, and obviously working with the debtors will time as to when we'll start the distributions of the assets that have been collected and monetized so far.
And maybe before I move it to you, Pete, just Brian, to clarify on one thing is basically any creditor of FTX.com is able to basically file with either the US or the Bahamas. Is that correct? You just mentioned the US date has just passed, but anybody who's listening on the show that had some kind of exposure there is able to file basically with the Bahamas process.
That's right, because under the global settlement agreement, I mean, the big arguments between us and the debtors were, whose customers are these, and do they belong in the Bahamas, do they belong in the US? And so ultimately, as part of the settlement, we made it more customer friendly in that they could decide where they wanted to claim. They could claim either through the US or they could claim through the Bahamas, and have, obviously the assets are jointly shared between both estates, and everybody will make, and Pete's going to address it, but the recovery should be almost identical for the customer.
Pete, let's say from a customer is listening to the show, Are there any differences on anybody who files with the U.S. insolvency process or the Bahamas process? And if there's no differences, how come?
Right, I got it. So just to start on the settlement agreement, the whole idea of that and the rationale, as Brian's explained, was to, if you like, eliminate the differences. Because if we had these warring or competing jurisdictions in terms of is it better to go to one than the other, that would be challenging for the customers to decide. So for the most part, other than some technicalities around the legal processes in each jurisdiction, they're the same. So what do I mean by that? The idea is that customers will get the same payout whether they claim in the Bahamas or in the US. Those payouts will be made at the same time. It's a lot of customers, so it might not be on the same day, but it'll be in the same batch. So in terms of timing, and in terms of how people receive their funds, the idea is very much that we're synced and aligned in terms of the process to actually give funds to customers in terms of handing over the US dollars via an electronic process, and we're working together on that now. And similarly, matters that will interest customers around receiving money, such as disclosures, KYC, even tax, they've all been aligned as well. So for all of those reasons, they are very similar, if not identical. The only differences that you've asked me to home in on are really just around the legal processes. And in the US, they have the concept of a bar date by which claims must be filed. Brian's mentioned that passed for customers in September of last year, 2023. In our process, the 16th of August date is the bar date, is the equivalent of the US bar date. And customers have to do two things by that date. They have to choose whether they're going to come or stay in the Bahamas process or go to the US process. And they have to then effectively release the other process. So if you're coming to the Bahamas process, you have to release the US process. And you do that in the way Brian has described, either via our claims website or by the ballot received. So that bar date difference between the two is the only one of note. There's some smaller things, such as in the Bahamas, we have to pay every single claim, however small, even if it's a $5 claim, whereas in the US, claims below a de minimis level, which in this case is $10, don't need to be paid. But I guess that's less relevant to most customers. But the bar date is the key one in terms of if somebody, for whatever reason, has not engaged on their claim until now, it doesn't mean they're not able to claim in the US process. They still have a full choice, but they've got time to discuss in the Bahamas process what their claim should be and to provide additional information if there's a mismatch in terms of what we think the claim is.
Very interesting.
Yeah,
Maybe,
just to clarify that, Henry, a little bit. So in the U.S. process, there is a schedule, and if you are on the schedule, you don't necessarily have to put a claim in. The difficulty is for people who have not gone back to dispute what's on the schedule. They're now time barred. If there is a difference and they can prove that the schedule is wrong, then there is still time to come to the Bahamas and make that point. And obviously we'll look at it closely because we want to ensure that in fact all the information is correct submitted by the customer. But that's a sort of a distinction in that the Bahamas is still live if there's some query and transfers hadn't been recognized into the company, or there was a miscalculation on the schedule in terms of the customer's balance.
interesting. Actually, maybe a question, Brian. Peter was mentioning that obviously customers now have to have till August 16. Maybe it's a bit of a stupid question on my side, but do you guys have any idea? And I don't know if you can disclose even this information. What percentage of clients do you guys expect will come by August 16 in either the U.S. process or the Bahamas process? And if they don't come or there's no claim, what happens to those assets? Do they go back to shareholders? Do they go back to other creditors? Sorry if it's a very basic insolvency question.
Yeah. So, firstly, I don't think we have an exact number. We know and we believe that there may have been approximately Actual users, we think was in the range of just over probably between 2 and 3 million, because some people had multiple addresses. In terms of the claims, it's an ongoing process, and that's why we're here today, is to get the word out so that people do get their claims in. Obviously, on the schedule, people will either are listed. Everybody's listed on the schedule, so essentially, at some point, everyone is ultimately within the joint process has a claim. But obviously, those that want to claim in the Bahamas specifically, they will need to either come through the ballot of the U.S. or they'll need to file a claim with us directly. So we don't have final figures. There has been some pre-elections, and I think put somewhere 35%, maybe that's somewhere in that area, are electing so far to go with the Bahamas, but still very early in the process. So we'll see ultimately how that pans out. In terms of your second question, if there is ultimately a surplus. Now remember that customers, we don't expect that there's going to be much of a surplus, because in both jurisdictions, or I should say estates, customers are getting a 9% sort of return on their money. We believe we'll be able to pay a 9% return until they're paid. So in terms of an excess, we don't think ultimately there's going to be an excess. As I said, everybody's on the schedule, and insofar as there is an excess, then we'll take a look at it at that stage and see who the proper recipients are.
Yeah. Actually, what I meant is okay. No, very interesting. Actually, I think it's TBD, I guess, from that
I mean,
perspective. If there
and
is,
just remember too, a lot of the money that the reasons why one of the reasons why that there's such recoveries is some of the U.S. Government bodies have chipped in quite a bit of money, and that is being channeled through the liquidators, and they have graciously allowed us to do that. And well, I'm sorry, not liquidators, but the debtors and the liquidators, and so that is allowing there to be such great tremendous recoveries. So insofar, ultimately, many of them have subordinated their claims to the customers, but they do have claims in, and so ultimately, they will be obviously considered as to whether, and there are shareholders, etc. So
I
there is
see.
places for any excess to go. We'll just have to figure out at the time where where the right place is.
I see. So even after a lot of the creditors, the clients, there's the guys, the like you said, some of the government authorities who have basically took a second row position on this, and then obviously the shareholders. And which brings me to another question
Yeah.
I'm sure many of our listeners have. Maybe I'll address this to you, Peter. Obviously we all read in the media about some of the expected recovery amounts. I believe it was something like 119 to I think it was all the way to 143 or around those numbers. Can you maybe explain to our audience how come the expected recovery uh, was so high, and is this common in insolvency cases?
Yeah, sure. And let me start with that second one. It's really not common. It's not totally unprecedented. There are certain businesses that have a profile that mean when the music stops that they are insolvent at that time, but over time that there's an over recovery, but very rare. Certainly in my experience. Um, and the key reasons why in this case that's come to pass. There are several, but I'd home in on the main, I think, three. Number one is that by law, in both the US process and the Bahamas process, the value of claims is struck at the date the insolvency commences. So in this case, there was a day between the dates, but they've been resolved as a single date, the 11th of November, 2022. So claims are valued at that date. So that sets the first point. Then it's a case of are there enough estate assets in the estate to pay 10 cents on the dollar, 50 cents on the dollar, or in this case, north of 100 cents. And there are a couple of big elements to that. Brian's honed in on the first one already, which is the government agencies have very large claims. The IRS in the US, for example, started with a claim that was, I think it was 20 billion plus. It may even been more. They've been negotiated down to a lower number, and several of the government agencies have actually agreed, because the fines or the amounts they would claim in their mind should be made available for the customers, which is good from our perspective because that's our role and our duty as well. So they've agreed not to take those claims out of the estate, but to leave them in and make them available for customers. That's the first big chunk of, if you like, the overvalue, or the value and then the overvalue. The other is that the group had done many weird and wonderful things. Um, Many of them proved not to be good investments, but within the portfolio, there were some good ones. We've heard about a lot publicly about some of the investments actually increasing many times. And as they are being realized, and the other various assets, including actually the crypto assets of the estate, because market prices have gone up, they combine to mean that there's sufficient assets in the estate to pay everybody in full, plus some interest, and at the higher end of those ranges, maybe some more.
Just in terms of the interest, I'd mentioned that the figure of 9%, but that's not certain yet. I mean, we obviously have to wait and see what recoveries are. Pete, I think that's right, to ultimately to determine and coordinate with the U.S. debtors, in terms of what the customer is likely to receive above their claim.
And on this topic, maybe Peter, you mentioned obviously how the process worked. Like for example, I've been watching a lot of these insolvency with other platforms as well, right? And there was a lot of criticism in the crypto community where, yes, it's great that we're getting over 100 cents, but actually, if we had held to the crypto, we would have gotten 2-3x. You mentioned there's a lot of assets on the VC side from Anthropic and the likes to a lot of the crypto tokens like Solana. Obviously, there was a lot of Solana there, which obviously significantly rose since November 2022. But is there a particular reason they could not be an in-kind distribution, or really in insolvency cases, we take a dollar snapshot and that is used? I'm just not the grasp, but I see, for example, what happened in another case, which was a Gemini settlement that happened recently, where actually users were able to get the Bitcoin back, for example, with interest. Maybe for the benefit of our audience, can you share why it's not possible to have in kind and it's instead is US dollar snapshot?
Yep, sure. I'll start off, and Brian can chip in. Really, it's just the fact pattern in this case. The total claims or the amounts of various coins that were supposed to be in people's accounts just weren't there by the time this went over. I think probably the best example. I mean, you talked about Solana there, and Solana was a coin that was well traded on the FTX exchange. But just to use the Bitcoin example in round numbers, I think if you added up every customer who had a Bitcoin or a share of a Bitcoin on the account, it totaled something like 100,000 Bitcoins in number. So huge value. But when the music stopped, there was something like 100. I think it was 101 Bitcoins. So there's your delta. So if Henri is owed one Bitcoin, I can't give Henri that Bitcoin because it's just not available. And if you got a fraction of it, then I suspect in most cases people would do worse than getting the dollar value. So it was just a practicality that a payment in kind, for the most part, wasn't possible. The other thing is that in an insolvency, we're obliged to sort of treat everybody equally. So you settle the currency that's most appropriate. In this case, I don't think there's any arguments that US dollar is an appropriate currency. But if the insolvency was in a different jurisdiction or all the customers were in one jurisdiction, you could settle on that currency. And then we have to pay everybody in the same way. So that's the reason in this insolvency. And I can only imagine that in others that have paid in kind, they had the ability to do that because the coins in question were there.
Interesting. And maybe,
Yeah.
go ahead. Sorry, Brian.
No, did you want me to add to that? I mean, the only thing I was going to say is, look, I mean, most people say, the value has gone way up of crypto. I want my crypto back because it's worth more than it was on November 10th. The law, unfortunately, what the law does is it sets the losses at that date, right? And then what it does is, so if we valued, and let's say on the day one when we got in, we got rid of whatever crypto was still there and that we held, right? most people would have taken a loss, and probably so there would have been more cash than crypto value or significant amount of cash, perhaps, and so those on the crypto side would be sharing, the fiat, the monies that people had in their account, so they would be benefiting. The only
Yeah.
reason now people are saying please give me back to crypto is the value has gone up, but that value attributes to the estate in law, because the losses were already set on those dates on the 10th. And the other thing is, it wasn't just that the Bitcoin disappeared. There was an incredible amount of commingling of assets, so that ultimately you couldn't. It was very hard for us to determine whether coins that we would have held would have actually belonged to the customer, right?
Interesting.
And if, yeah, so yeah,
Maybe a bit of a personal, I think for our benefit of our listeners, as was mentioned by Brian and Pete. So, in case anybody's listening to this podcast today and you have FTX claim August 16, before that, make sure you go to the website. We'll put the link to the claim platform actually
yeah.
on the link under our under both the YouTube and the podcast pages, so people can go. Maybe a personal question actually to both of you. I mean, you obviously very experienced. You've done numerous of these insolvencies. What personally, at the personal level, surprised you the most? Maybe I'll start with you, Brian. I mean, obviously you mentioned there was a lot of commingling and
Okay.
this and that. What surprised you the most with the FTX insolvency?
I suppose a couple of things. One was I think the lack of accounts and the lack of ability for us as liquidators when we first got in to be able to determine what the assets of the company were, the undefined relationships, or and that it was crypto, and the law is evolving of crypto as to the ownership of the assets. Um, but primarily, I would say it was the way in which the lack of books and accountability of the company in terms of its fiscal affairs. We at the beginning, as I said earlier, we had very little information, Peter and I and Kevin, and we were going off. We were really having a lot of meetings with Sam, and at the beginning, he wasn't overly cooperative. He became more cooperative, but I think that there was nothing for him to take us to really to help us in terms of finding our way through the accounts, and that took a great amount of time and a great amount of effort on behalf of the debtors and Price Waterhouse in terms of trying to resolve those and do a deep dive to determine what the assets of the company were and where they were.
What about you, Peter? As somebody who's very experienced in the field of insolvency, what surprised you the most when it comes to the FTX insolvency?
Yeah, I think certainly the point that Brian's mentioned, that was totally unusual.
The lack of
And I
accounting
suppose
books.
the once we started understanding why that was the case and how the business was run, just realizing actually how it was a super successful business, actually run on a very different model to traditional businesses. Now, that wasn't the surprise, right? I completely understand that a crypto exchange is run differently to a bank or a manufacturer. But in fact, for the volume of trades that were being done and the revenue that was being generated, it was actually a lean staff and a very lean operation in terms of governance. Um, and one of the challenges, as Brian's alluded to, is it wasn't just that things were jumbled up. It was just a classic situation that if the insolvency hadn't happened, I think things would have been fine because things just got done in a very different way to how they're normally done in a business. But as soon as that event happened, then it was virtually impossible to create the records. They were all electronic. There was no paper files, but they were either not accessible electronic records, we were denied them, or they didn't exist anymore because they were disappearing messages. So just an extraordinary set of circumstances that made it super difficult to actually work out what had happened.
You know, Brian, you mentioned your dealings with Sam. Again, maybe a personal question. I don't know how much you guys can share on this, but how like how do you find dealing with him as at a personal level? Obviously, now is gone. Is going to be in jail for a while. What's your impression of him as a person? Were you surprised of seeing what happened, obviously in court afterwards, but also as at a human level? What was your impression of dealing with him?
Well, Sam is a charismatic, likable likable person in some ways and on some dimensions. I mean, there seemed to be there seemed to be different, I wouldn't say different sands, but there seemed to be on different days, uh, he would be less cooperative or more cooperative. And I think in the early days, he wasn't very cooperative at all. He was difficult to deal with. He was obviously had a lot going on, and wasn't really focused in terms of the issues that we were raising with him. And in the background, when there was the hack going on, he was filing in Chapter 11. We were unaware that he was doing that. Um, he was moving assets to the debtors and telling us at the time that, or not telling us that it was him doing it, and we didn't know where the assets were going. So, but I think once we got settled in, he became a lot more cooperative in terms of assisting us as to the best of his knowledge, in terms of the structure, in terms of how they dealt with customer assets, in terms of where he felt there was any value. And in making a personal effort, he was trying to raise funds. He was trying to get investors to see if he could turn things around early on. So as all, my impression was, I think the impression that most people have when they meet him. I mean, he's very complicated. He is in his own way. He's a nice guy. In terms of his moral compass and whether he acted to the detriment of his customers. I mean, the U.S. court has made a decision on that, and that's not really something for me to comment on.
Yeah.
Yeah.
Interesting. Maybe another question. I know I've gotten this a lot in with a lot of my followers and subscribers for the show. I think a lot of people were surprised, for example, of the high cost of the entire insolvency, how many lawyers are involved, how many accountants are involved in the process. I presume, maybe for the benefit of our audience, I don't know, Peter or Brian, whoever wants to take this, but can you share like whether you think the not the cost, but let's say the manpower involved in such a project was justified in the case? Is it because of the complexity of of how big it was, insolvency, lack of books, for example, or you think there was it was no other way basically of doing it, and the costs were just justified? I know it's a very difficult question because you guys obviously the liquidators, but I know it's a question a lot of the people have been asking.
Yeah, sure. Let me kick off on that one if I may. Look, if the process had been different, i.e., this was one jurisdiction, this would be, if not then one of the most complex insolvencies ever. I think by the fact that the fact pattern, that the way the business had been run, with an entity up to a certain date being the principal entity, then that transitioning to be the Bahamas, and the Bahamas being the regulated entity, ended up in this situation we've got where there are effectively dual processes. And once that train had set running, really the only way to, if you like, do things efficiently were to find a way not to combine the processes because that's not legally possible, but to work together. And that's where we got to once peace broke out. We were trying to get there from the outset. There seemed to be a will from the US side as well, but it just took us a long while and a false start to get there. But either way, whether this was dealt with in one jurisdiction or two, or multiple jurisdictions, the complexity is just off the scale. You've spoken about the sort of the size. Brian mentioned 3 million customers. I think by some analysis, there's maybe as many as 9 million on the books, but that includes people who've registered but never traded. But even if you said there were 1.3, 1.5 million active customers, if you compare that to any other kind of insolvency, whether it's a retailer, the number of people that you've got to deal with, both their queries, dealing with their claims, etc., is really exponential to what would normally be out there. And then the customer base as well. We're talking about the international platform, by definition, not FTX US. So pretty much every other jurisdiction in the globe has customers, some in small numbers, some in great concentrations. So even to the extent of needing language capabilities, time zone coverage, etc. So I think in either jurisdiction, this would be a super complex insolvency that would need a proportionate response in terms of the value that was at risk that needed securing, realizing, and the complexity of issues to work through.
Interesting.
But the element of the two jurisdictions just complicated that further. But I think since we signed the global settlement agreement, that duality still exists in terms of the two processes, but the cooperation and now the outcome that we've got of allowing customers to choose whether to claim in the Bahamas or in the US and still get the same outcome, pretty much, is kind of the best outcome we could have gotten to.
We're coming almost to the end of the show. I have a quick question, maybe Brian, for you. Is
Sure.
obviously now listeners have till August 16th to obviously come file a claim. Like I know a lot of people have been buying these claims afterwards. A lot of these big hedge funds that invest in, insolvencies and the secondary claims. From a liquidator perspective, does it change something that a lot of actually people holding the claims are like professional investors, or in practice doesn't make a big difference on that side?
Well, I guess what it does is it doesn't make a difference in the sense that obviously to take an assignment of a claim, we've still got to look at that claim. It's each individual claim. In terms of there being less people to deal with, I suspect that will ultimately will put us in a better place in terms of not dealing with up to 9 million people, but on some calculations, but it'll drastically reduce the amount of numbers of in terms of contacts that we have to encounter with on a regular
Interesting.
basis and correspond with. Yep. So, yep.
And what, maybe another quick question: what happens to the physical goods? I think many of my listeners know I collect a lot of artifacts from companies that have gone bust over the years. I have my Blockbuster share certificate here. I have the one from Kodak here as well, because I'm sure there'll be a big collector's market of FTX items. What happened to those, by the way? Out of curiosity, or it's too.
Well, Henry, they're effectively, for the most part, assets of the estate. And what I mean by for the most part, some of them are liabilities, because there were some perishable goods that are out of date that ultimately need to be disposed of. There are some other things that gave us technical challenges, like alcohol, that we would need a liquor license to sell. But down to, I don't know, memorabilia or FTX merchandise, they're assets that we would like to sell, if we haven't already, to maximize the return to customers, basically.
Super interesting. I think that'll be it's gonna be very very interesting to watch on that side. Yeah, Brian, go ahead. Sorry.
No, I wasn't really adding anything to that.
Yeah. Well,
Yeah.
maybe and final question. Obviously this is a big thing in the history of finance. This, there'll be documentaries about this. There'll be movies about these. I'm wondering who's going to play you guys in that. For sure, Netflix series is going to come up on this. But at a personal level, right? I mean, having seen this entire thing, and if one day your kids, your grandchildren watch this, right? Watch this interview. What is the one main takeaway that you took from this entire process? Maybe start with you, Pete, and I'll move it to you, Brian, afterwards.
I guess the takeaway is, you don't, I think, in most cases, plan for failure when things are going well. And this is a super bright guy, as we've alluded to, who had a bunch of people around him who knew what they were doing, and they did it their way, but they weren't set up for what happened, and you couldn't have prepared, I think, a business worse for what followed, than the way this one was. So that I think is the abiding thing for me.
Brian?
Yeah, I think I'd adopt that, and I'd say, if you're sort of young entrepreneurs, A, have a mentor, but B, make sure, early on you're getting advice, like you're getting advice on how to structure your accounts and how to go forward. I mean, this was a very successful business. It was run by some very bright people, and had they set themselves up properly and taken proper advice, and acted in accordance with that advice, then I think they, would still be a successful company.
Wise piece of advice, of course, a bit too late.
Yeah.
Gentlemen, Pete, Brian, thank you very much for coming on the show. I think for our audience, again, for anybody listening, as you mentioned, make sure the August 16 date, we're going to put the link of the relevant links under the podcast shows on the YouTube page. Thank you very much, Pete. I have to say, Brian, this was very, very insightful, very useful, and hopefully this will reach more people that need to know about the process.
All right. Thanks, Henry.
Welcome. Thanks for having
Thank
us
you,
on.
Pete, Brian. And thank you very much, everybody, tuning in to this special episode. Really, this exclusive interview on the podcast with the joint liquidators of FTX Digital Markets Limited. Thank you very much, everybody, and see you all soon for another episode of your Future of Money podcast.